Bitcoin is allowing us to turn these margins, these big margins, into exponential equity valuations. We're using public markets in ways that were previously unimagined. So what we're witnessing in this technological revolution is a new financial asset, the first new financial asset we've had in over 300 years. And if you're an investor in today's market, you need to understand these things right now. This is the greatest opportunity that we've had, obviously, with Bitcoin and these Bitcoin treasury companies. And so the metrics of the old companies no longer apply. It's not PE ratios or discounted cash flows. Instead, now it's Bitcoin per share. For one share of stock, how much Bitcoin do I get? Because for us, one Bitcoin is one Bitcoin, right? So the incentives for smaller players are that they move the fastest. We're still in a place where I like to say the future is not evenly distributed. And so for those of us that know this massive arbitrage opportunity is there for us right now, the first mover advantage.
There is not much time left. Even while entire countries are currently rushing to ensure their financial future, relatively few people are aware of what goes on behind the scenes. The system has been flooded with cheap money over the last 10 years as a result of central banks printing trillions of dollars out of thin air. However, according to prominent market strategist and economic historian Mark Moss, we are about to enter a time that has never been like this before. Overnight, artificial intelligence is changing sectors by substituting algorithms for human labor. At the same time, Bitcoin is emerging as a new decentralized, incorruptible currency that gives people more control over their finances rather than banks and governments. Moss cautions that like horse carriage manufacturers after the invention of the automobile, those who do not adjust to these changes will be left behind. If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
We're talking about something different today. We're talking about something so big and so profound that most people are going to be completely caught off guard by it. And the fact is that most companies represented in this room today and in the world today will be gone in 5 years, will be completely obsolete. And the reason isn't because they lack capital or they lack talent. The reason is because they're playing by a set of rules that are being rewritten right now, right in front of us. And most people don't understand this because we're living through the sixth technological revolution that we've had in just the last 300 years. Now, the companies that understand this, and we'll talk about them, are able to jump on this and benefit from this while everybody else is going to be wiped out. Now, I'm calling this the sixth technological revolution. We see this pattern repeating for the last 300 years. About every 50 years, humanity experiences this quantum leap where it rewrites the rules of business and power and money. I've spent decades studying political cycles and financial cycles and technological cycles. And we can see them going from the Industrial Revolution in 1771, where we had the first mechanized machines. We had steam engines. We had railways, electricity, steel, automobiles, oil fuels. We had microprocessors, personal computers, the internet. And each one of these cycles takes the world forward in a forward leap. But it also changes the entire economic environment and world that we know. Now, we're fully in the sixth wave right now. And to really understand what these waves are, you have to understand it's not just one single technology. It's always a cluster of technologies. It's multiple technologies coming together that give us new sets of building blocks to build things that we don't even know or understand. Today, we have two very powerful technologies. We have AI, which is completely eliminating the cost of human capital. At the same time, on the other side, we have Bitcoin, which eliminates human-controlled money. Now, both of these are working together. They're feeding off of each other. Smart companies are buying the only asset that AI can't create. And what we're seeing is a collision between infinite efficiency, when human capital costs go down to zero, meeting absolute scarcity. And most companies have no idea what's about to hit them because most of them don't understand the data they should be looking at. Wall Street doesn't show it to you. Bloomberg's not going to report it to you. Today, we have over 125 publicly traded companies that own over 721,000 Bitcoin, 3.5% of the total supply. Now, these companies aren't just holding, they're buying as aggressively as they can. They're stacking so fast, and the analysts can't even track what the fair value of these companies are. Smart companies are tracking a different set of metrics like premium compression velocity, MNAV, days to cover the MNAV, while traditional business owners or investors are still looking at DCF models. It doesn't make any sense. The current reality of the situation that we're in right now is that as AI is collapsing the cost of labor, Our governments are continuing to collapse the value of our currency, of our money. And at the same time, we have Bitcoin now being introduced into these companies, and it's completely destroying all the Wall Street valuations. Most people don't know how to make sense of this anymore. And we either have to master these technologies right now or get built over by companies that do. But we're going to change that right now. All right, what we're witnessing is a great valuation reset. While most people don't understand these companies because they're trying to understand PE ratios, they're trying to understand DCF, they're trying to understand ROE. These are old metrics. These are yesterday's metrics. The new survival metrics are AI revenue per employee or Bitcoin per share of the company. Premium compression velocity. We're going to break some of these down. These are the new KPIs if you want to learn how to invest in this world and build businesses in this world. And the sad fact is, right now today, we're full of zombie companies. Zombie companies, they're dead men walking. Yeah, they're still alive, but they're dead. 40% of the companies listed in the Russell 2000 index are zombie companies. That means they can't afford to cover the debt service that they have.
According to Mark Moss, the traditional methods of evaluating businesses, such as examining return on equity or price-to-earnings ratios, are no longer effective. The revolutionary impact of Bitcoin and artificial intelligence cannot be measured by those conventional instruments. A new era has arrived, and new figures are required. One excellent example is MicroStrategy, which has since changed its name to Strategy. It changed from being a typical software company to one that actively purchased Bitcoin. With almost no conventional cost, it currently holds close to 600,000 Bitcoin, or roughly 3% of all Bitcoin that will ever exist. The company's market value has radically changed as a result of that enormous Bitcoin stockpile. New AI-driven companies, on the other hand, are accomplishing more with 50 employees than traditional businesses do with 500. They employ AI to increase their profits, which they then use to purchase Bitcoin, further solidifying their position. It's a vicious cycle. AI drives profits, which in turn purchase Bitcoin, which creates unstoppable wealth. Please take a moment to like this video, subscribe to the channel, and enable post notifications for future Bitcoin, macroeconomic, and digital asset content before we go any further. Now, let's get into his powerful predictions.
All right, let's look at a couple case studies. One you're very familiar with. We're talking about Michael Saylor's company, previously MicroStrategy, now named Strategy. We can see that they were able to take a profitable software business that was failing. He's talked about how he tore it down and rebuilt it over and over and over. And he's brilliant. And even he couldn't compete in today's environment until he decided to tap into the public debt and equity markets and start leveraging a Bitcoin on balance sheet. He was able to raise $8.2 billion at a cost of almost 0.8%, getting over almost 600,000 Bitcoin, or about almost 3% of the total Bitcoin supply, the total Bitcoin that will ever be created. His company now trades at a 2.5 times equity multiplication. It's not just financial engineering. This is a balance sheet evolution. This is how the new companies will compete. And so now there's a whole new set of metrics that Wall Street doesn't understand, but they can't ignore them. And if you're an investor in today's market, you need to understand these things right now. This is the greatest opportunity that we've had, obviously, with Bitcoin and these Bitcoin treasury companies. And so the metrics of the old companies no longer apply. It's not PE ratios or discounted cash flows. Instead, now it's Bitcoin per share. For one share of stock, how much Bitcoin do I get? Because for us, one Bitcoin is one Bitcoin, right? So what is the Bitcoin per share? The MNAV is the market cap of the company divided by the Bitcoin they have. Now, some traded at 2 times like MicroStrategy. Metaplanet's at a 6.8 times. Why is that? Well, we want to look at the days to cover. How long will it take them to acquire new Bitcoin, the Bitcoin yield, in order for them to cover the market NAV, the MNAV? We need to understand the premium compression velocity. That's how quickly they can compress that premium. It's a whole new set of metrics, and if you don't understand these, then you won't be able to succeed in this new world. This is where Wall Street's being left behind, and this is where our opportunity lies. Now we can see the playbook, the strategy playbook. MicroStrategy changed the strategy so they can push the strategy to the world, and the playbook is now going global. We can see these companies all over the world. Japan has Metaplanet. They've introduced their 555 million plan to deploy 5.4 billion into Bitcoin. We have in Europe the blockchain group. Alexander was up here on stage yesterday issuing Bitcoin-backed bonds. In Korea, we have BitMax. In Canada, we have Matador, a company I work with. In India, we have Hodl Systems. And the beauty of this, that's allowing this transition to happen so fast, is because the infrastructure is already here. The failing infrastructure, the $300 trillion bond market that's failing with capital stuck looking for a new home. $200 trillion in equities stuck in an old model looking for a way to get out. These markets are already there. These companies just have to pop in a straw and just start siphoning off from this. The infrastructure is already there. And this is why we can see the adoption curve steepening so fast. Again, just 72 of the top companies own over 3.5% of the total supply. So the incentives for smaller players are that they move the fastest. We're still in a place where I like to say the future is not evenly distributed. And so for those of us that know this massive arbitrage opportunity is there for us right now, the first mover advantage, but it's closing fast. Okay, so we have these two technologies creating this flywheel effect. AI increases business operational efficiency, increasing profit margins so we make more money. In this fiat system that we're in, right, our money is worth less and less. And the only way for us as business owners or investors to compete against this is to become more efficient than the government steals that from us, number one. Then we take those huge margins and we put them into Bitcoin, and then we tap into the fiat system of public debt markets and equity markets in order to accumulate Bitcoin at a rapid scale. Then each turn of this flywheel gets faster and faster and faster, okay? This is economic escape velocity. Now, if we look at this, when we look at combining these new technologies to all new companies that we own, that we work for, or that we invest in, we can now start to see the difference. So now let's go back to the same traditional SaaS software company. Again, these are already extremely efficient businesses. Doing $100 million in revenue, 500 employees, making a 20% profit margin means they have $50 million in cash. What do they do with it? All the businesses that are out there today. Oh, they park it in treasuries, 5%. $20 million of profit, or $50 million of profit plus the 5% treasuries, they made $22.5 million. We take a more efficient business, the same revenue, but with 50 employees and 85% profit margin, $200 million, but now into Bitcoin. And we're only looking at a 40% yield. Bitcoin's averaging a 50% yield right now, but at a 40% yield, that's an $80 million appreciation or $165 million, 7 times the profit. These are the types of companies we want to build, we want to invest into.
Mark Moss wants people to realize that the way wealth is generated and safeguarded is changing dramatically. Companies use the same old strategies to compete for decades, reduce expenses, increase revenue, and display healthy earnings ratios. However, AI is now cutting labor costs to almost nothing, and Bitcoin is providing businesses with a means of safeguarding their funds against inflation and currency devaluation. For this reason, the outdated playbook is being abandoned. Not only will the businesses with the best products or profit margins be the next big winners, but those who employ AI to increase productivity and then convert that extra earnings into Bitcoin reserves that appreciate in value while fiat money depreciates. And there is already the infrastructure in place to make this happen. Massive debt markets, public equity markets, and trillions of funds trapped in antiquated financial institutions that are clamoring for higher returns. Innovative businesses like Strategy, Metaplanet, and others are acting swiftly to divert that money and seize Bitcoin while they can, giving them a significant edge that trailblazers won't be able to match. Mark's main point is very clear. This window will close eventually. The first investors and businesses to grasp these new regulations are already securing their edge. You risk being left behind with the elderly zombies that are incapable of adapting if you are not paying attention. Therefore, if you want to stay ahead, study these new measures, comprehend how Bitcoin and artificial intelligence operate together, and be able to identify the businesses that are utilizing this new strategy. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.